Nice to see everyone, and thank you for taking time to listen to the Karora Resources story. A couple of forward-looking statements, and then we'll jump right into it. If I can get this to work. Okay, so yeah, in summary, we're a Western Australian gold producer. We're producing about 120 to 135,000 ounces of gold this year, but most importantly, we're going to be expanding our gold production to about 200,000 ounces by 2024. We've put out a 3-year growth plan, which I'll talk about a little bit later. We put that in mid-2021. We are located in Western Australia, obviously a Tier 1 jurisdiction, just south of the Kalgoorlie Gold Camp. For those of you familiar with Western Australia, great place to be mining, and certainly a long history of mining in the region. Also, something that we care deeply about is the ESG drive towards carbon neutrality. It's one of our pillars in our ESG program. I'll touch on that, and then we'll get into some of the details of the mining assets. We have reached carbon neutrality for the second straight year. We did it in 2021 and in 2022 again. We actually were the first junior gold producer in the world to achieve carbon neutrality in 2021. It's just one of our approaches towards the carbon challenge that we're all facing. We're also working on a detailed emissions reduction plan, which we'll be updating the market on in the first quarter of 2023 as part of our ESG report. That's going to include an analysis of our Higginsville power solution. Those of you not familiar with the story, I'll talk about Higginsville a little bit later, but that's going to be driving down our emissions from our power generation on site. It's all diesel generated power on site there, so an easy target for us. So we're taking a dual track approach towards this, emissions reductions at the same time as working towards some offsetting projects. And very interestingly, we've actually secured some very large US investors over the course of the last year off of the basis of having a climate action plan. So it does pay off from a share price perspective as well. Stepping into the assets, you can see on the left-hand side there, located in Western Australia, as I said, just south of the Kalgoorlie. We have 3 operating mining centers. The flagship operation is the Beta Hunt mine, which many of you I'm sure are familiar with. It's been around for quite a while. It's kind of been re-envisioned by the new management team over the last couple of years. That really is the crux of the value of the company. To the south, another 70 kilometers are the Higginsville Central mines, and importantly, our Higginsville Central Mill. And then, of course, we have the Spargos mine as well, which is a high-grade open pit, which will be transitioning into a underground mine. Not only do we have one mill, centralized mill in terms of the Higginsville mill, but we recently acquired a second mill called the Lakewood Mill, which is pretty close to Beta Hunt. In fact, it's 20 kilometers closer to Beta Hunt than our Higginsville Central mine. And one of the big reasons why we acquired that second mill earlier this year was to address one of the major problems that a lot of mining companies are facing these days, which was capital increase associated with an expansion plan that we have. Before I jump over to talk about the Lakewood Mill, I do want to highlight that green shaded area, which hopefully you can see on the screen there. Yep. 1,900 square kilometers covering what's known as the Zaluka Shear, which is the major shear zone that hosts all of the huge deposits in the Kalgoorlie region. So everything up from the Golden Mile to the north, 60 million ounces, St. Ives next door, 14 million ounces, Norseman to the south, 6 million ounces, are all hosted by that same regional structure. I'm going to say this twice. We are the largest landowner in that region, more than Goldfields. So 1,900 square kilometers coverage of that area. So not only a great producing story and free cash flow generating story, but also a very prospective exploration story. So something to pay attention to as we move forward. Touching on the management team, most people in this room are probably familiar with Paul Hewitt, the former chairman and CEO of Klondex. Red Cloud were big sponsors of Klondex as well. His approach to Klondex was a single sort of orphaned asset without a mill, bolted on a mill and several other assets in Nevada. Same strategy here at Karora Resources. We had the Beta Hunt mine, no mill. In 2019, we acquired that Higginsville mine and mill, and then we just added a second mill. So kind of that hub and spoke mentality or approach towards operations. So doing the same thing here quite successfully. Our most recent addition to the team is Bevan Jones. Bevan Jones comes from the St. Ives camp. I'm going to pop back to the previous slide. If you can see, St. Ives is literally right next door to Beta Hunt, so has a very strong reputation in the region. So comes over from Goldfields. He accomplished several major things at Goldfields. Increased production at St. Ives over the last 4 years by about 30%. decreased all-in costs, not all-in sustaining, but all-in costs by about 25%, and improved the safety record of the operations at the same time. So has a very strong reputation in the region, that kind of big company mentality in terms of optimization. Perfect time for him to come into the company as we grow into that 200,000 ounces a year. So really happy to have Bevan on board. Myself, I won't introduce myself, but we've also got Barry Dahl and Mike Doolin, two ex-Klondex guys on the technical and financial side as well, rounding out the team. So I'm going to touch on Lakewood, then we're going to spend the majority of our time talking about Beta Hunt, and then of course we'll have some time for questions at the end. I won't touch too much on Higginsville Central, but happy to take questions on there later on. Beta Hunt really is the core of the valley, so we'll focus there. So the Lakewood Mill acquisition we acquired earlier this year, $80 million. We had a very successful bought deal in a small window in the gold market that was oversubscribed to acquire that mill. And the main reason was the use of proceeds. So when we announced our growth plan in mid-2021, it included an expansion of the Higginsville Mill from 1.6 to 2.5 million tons per annum. Just like many other projects on the planet, we saw a major increase in capital quotes over the course of, the remainder of 2021 and into early 2022. And we realized that we could actually go out and buy that expansion right now, today, for less money than it was going to cost us to expand it. For context, originally that expansion was going to cost us $60 million Australian. Price quotes had increased to over 100 million, plus or minus 20%, which means plus 20%. So things were getting very much out of control there on the capital side from our contractors, but also schedule risk. Our major EPCM contractors were building two other mills in the region, and they said they were not sure they could get people there on site. So earlier this year, we took matters into our own hands and acquired that mill, which we were very, very happy with. It's performed very, very well, and there's actually a couple of advantages to having, aside from diversifying your milling risk exposure, to having that second mill there, particularly the way that Lakewood's set up. Number one, as I mentioned earlier, it's actually 20 kilometers closer to Beta Hunt than Higginsville, so we save a few dollars per ton by trucking it there. But also, we have 100% of our feed going through gravity at Lakewood. So we actually get 1% stronger recoveries, 94% recovery at Lakewood versus the Higginsville mill for Beta Hunt materials. So some economic benefits at the same time as de-risking that entire growth plan. So that's worked quite well for us. We got the keys to the mill in August, so the third quarter that we recently put out was our first quarter of demonstrating what two mills can do at Karora Resources. So you can see there's a histogram there of all of the production quarters we put in since the new management team came in and acquired the Higginsville mine and mill. And then most recently in the third quarter, we had record production of close to 39,000 ounces as we build into that growth plan, and also our costs can continue to come down. One area that we do flag is the first quarter of 2021. So you'll see on the all-in sustaining cost line, there's quite a spike up in the first quarter of 2021. For those of you not familiar with operating in Western Australia, something very significant happened there in the first quarter of 2021. For the first time in 627 days, the Western Australian border was opened up. So not only did that bring people with it, but it also brought the first wave of COVID ever to Western Australia. So you saw massive absenteeism associated with COVID-19. So, a bit of a unique situation. The rest of the world was dealing with this a little bit earlier. The first time it ever was dealt with in Western Australia was the first quarter. That subsided over the course of the last two quarters, obviously, as it has everywhere else in the world, and we've continued to attack that cost line. Really proud to say we got back down to just under $1,070 an ounce in all-in sustaining costs in the third quarter. So operationally back on track and executing with those two mills. This is our 3-year growth plan here. I'm not going to read all the numbers out to you, just the top line numbers there. You can see we expand up to that 200,000 ounces a year mark. Very comfortable with that guidance moving forward, which is great. And we'll let you go through the rest of the table on your own. I do want to touch on some of the parts of Beta Hunt, particularly the nickel here as well. So how are we expanding Beta Hunt? This is our primary asset and where the majority of the value is at Karora Resources. We are doing a couple different things at Beta Hunt. There's the resource and reserve table, but in order for us to expand that production, we are adding a second decline at Beta Hunt. So for 30 years, those of you not familiar with Beta Hunt, it was a nickel mine. All of this infrastructure that you see in place, the black lines there on the slide, have been in place for 30 plus years. 400 kilometers of existing infrastructure is already in place at Beta Hunt. Not only that, it's hosted in a very competent basalt unit, which means that our ground support requirements are essentially nil. There's no backfill at Beta Hunt, so very, very competent ground to be mining in. How does that benefit us? It benefits us in two ways. Number one, we can leverage that existing infrastructure to mine the gold. Only nickel was mined historically at Beta Hunt. And then number two, we can use that infrastructure to explore. And in the last 3 years, this asset has gone from about 400,000 ounces in resource to now 2 million ounces in resource net of depletion. Expect that to continue to grow next year. So a real benefit for us to leverage that existing infrastructure in place at Beta Hunt, and obviously helps us on the cost front with very, very low development and no backfill requirements whatsoever. I did mention the second decline. This is a graphic showing the second decline in yellow there. We're actually, and it sounds weird saying this in sort of today's environment, we are ahead of schedule and technically under budget. I'm going to say we're on budget, but we are going to be completing this in the first quarter of 2023. That was originally slated for completion by mid-2023, so tracking very well. We actually attacked it from two directions, from underground and from surface at the same time, and they'll meet in the middle. That will bring production at Beta Hunt from 1 million tons per annum to 2 million tons per annum. So that's how we get that asset to double in size to about 160 to 170,000 ounces per year. Of that 200,000 ounces will come from Beta Hunt alone. So when I talk about being the core of the value, it really is. So that's tracking very, very well. And the last thing I'll say here is, we actually did over 100,000 tons a month in the last quarter. So if you start to annualize that, you're actually getting closer to 1.2 million tons per annum out of a single decline at Beta Hunt. So very, very interesting there. Lots of gold resource additions over the course of the last 2 years. We've discovered 5 new major gold shear zones. These are very large, continuous ore bodies at Beta Hunt. Expect that to continue to grow from a resource perspective. But very interestingly, at Beta Hunt, and this is actually a perfect example of showing how it's set up, we found a lot more nickel. So we are one of the first companies that has both the nickel and the gold rights at Beta Hunt. And this cross section right here, the reason why we're showing it is to actually give you a sense of how the nickel and the gold are related at Beta Hunt. So you have, I'm not a geologist, I'm a mining engineer, so I might brutalize this, but you have the purple on the top there, which is the basalt unit, the ultramafic unit, and then the basalt unit underneath it. You have these vertical gold shear zones, and at that contact point between those two units, you get these very, very high-grade nickel troughs, some phenomenal grades there. So basically, everywhere you have gold at Beta Hunt in these vertical gold shear zones, you have these pods of nickel that sit on top. Not only that, but if you look at the scale, that piece of underground development, by the way, has been in place for the last 25 years in perfect condition. Within about 5 to 10 meters of where the gold is where you find the nickel. So you can use that same infrastructure for mining both parts of the deposit, which is really a huge benefit to us. This is our initial nickel resource that we put out in January of 2022. I'm going to skip right to the bottom line here, and the way that the Aussies like to look at this is in nickel tons, or nits as they call it. So 30,000 nickel tons at 2.7, 2.8% nickel. It's very, very high grade nickel. We'll probably be pulling that out of the ground at around 2% nickel once it's actually been diluted a bit. So very, very high grade nickel, which we're extremely happy to have. And earlier this year, a couple months ago actually, we put out our first PEA on the nickel. So not only are we going to be mining 200,000 ounces a year of gold, 160 to 170 coming from Beta Hunt, we're also going to be mining a meaningful amount of nickel. About 2,000 nickel tons per year will be coming out of Beta Hunt. What does that do to our bottom line? It's probably going to shave about $100 an ounce off in byproduct credits, and it comes for a very, very low capital investment of only $7 million in the first year. Why is it so low? Again, coming back to that theme of shared infrastructure. We're mining the gold and the nickel from the same infrastructure, so your capital costs are extremely low. I challenge anybody to name a project that's mining this kind of grade and tonnage in nickel that you can bring online for $7 million in the modern era. So pretty exciting there for sure. We do expect the nickel resource to continue to grow meaningfully. And I'm just going to highlight this slide to give you a sense of just how big the nickel could be. Those two green boxes that you see there host the current resource. All of the historic nickel mining at Beta Hunt was conducted where those red dots are on the left-hand schematic there in what was known as the Hunt block and the Beta block. Anything that was south of that Gamma Island fault, I don't know if there's a laser on this. Is there a laser on this?
I think so.
Oh. Yeah, there we go. Anything that was south of this Gamma Island fault here, basically down to the right, is completely virgin territory. So we've put a drift through this fault here and drilled off about 800 meters of strike extent of this resource. Another 400 meters from the edge of that box right down to this line here is where a historic surface drill hole returned 9.5 meters of 11% nickel. So we are very, very, very convinced and very, certain that that will continue to that boundary. Not only that, another 1.4 kilometers from there to our property boundary, there is not another another known major regional fault. So while I can't tell you that it continues all the way to that property boundary, you cannot tell me it doesn't continue to that boundary. So we will continue to drill that out. And if you look at everything historically at Beta Hunt, these major nickel zones have continued along strike of the structure until you hit a major fault, along strike of the structure until you hit a major regional fault. So a total of 66,000 nickel tons came into this region. Could there be another 66 here? We've already got 30. We'll see. So lots of interesting work to be done there on the nickel front as well. The limiting factor to getting more of this done faster is ventilation. The additional ventilation comes with that second decline going in. We're starting our second ventilation raise. We can get more people, more equipment down there to both drill and mine. So 2024 is going to be very, very interesting. I'm going to skip over Higginsville. I see we've run out of time. We're going to have some time for questions, but Higginsville keeps chugging along. It's a great series of open pit mines around the Higginsville mill. From a throughput perspective, when we're fully expanded, only about 300,000 to 400,000 tons per year will be coming from Higginsville and from our Spargos gold mine, which is that open pit mine that we acquired in 2020 for about $4.5 million Australian. We've now mined over 40,000 ounces of it. Very, very high grade open pit, north of 3 grams. And we also have some very interesting underground grades. If you look right here, an ounce per ton over 19 meters, ounce per ton over 15 meters, some pretty interesting grades to chase up on. So we will be going underground at Spargos as well. I think I'll finish off there. That's a valuation slide, and if there are any questions, we might have a few seconds.